Not so long ago, buying shares meant phoning up a stockbroker, paying hefty fees and needing a serious chunk of money just to get a foot in the door. Today, you can do the whole thing from your phone in minutes for the price of a coffee. Hello, I'm Brian, and today with Moneyfarm, I'm going to walk you through how to start buying and selling shares online with all the practical steps to set yourself up the right way. Let's dive in. So let's start right at the beginning. What actually is a share? Put simply, a share is a tiny slice of a company. When you buy one, you become a part owner of that business, however small your stake. If the company does well, the value of your share can rise and your investment grows with it. If it struggles, the price can fall and your investment is worth less than you paid. Shares are bought and sold on stock exchanges and their prices move up and down throughout the trading day. And it isn't only the company's own performance that moves the price. The wider economy plays a part too, and so do global events and the so-called investor sentiment, which is how confident or how nervous people are feeling at any given moment. So you can see straight away that shares aren't a one-way bet. Prices rise and fall, sometimes sharply, which means you can certainly make money, but you can lose it too. And that's the trade-off you accept in exchange for the chance of growth, and it's worth keeping in mind for everything that follows. A couple of quick things you'll hear along the way. First, some companies pay out a slice of their profits to shareholders, and these are called dividends. You can take them as income or reinvest them to help your pot grow faster. And second, you'll often hear shares referred to as equities. This is just a broader term for the asset class, but in everyday use, they're often used interchangeably. So the next question is, why would you want to buy and trade shares? Well, buying and selling shares is one of the main ways that people try to grow their money. If you've got plans and goals that need financing, growing your money can help you get there faster. Now, let's just focus on the word trading for a moment. Broadly, this means buying and selling goods and services. So when you're buying and selling shares on the stock market, you're trading. But in finance, trading has come to take on a more specific meaning. It usually refers to buying and selling investments to try to make quick profits, usually from short-term price movements. Some people do this successfully, but for most people, particularly beginners, that's not what buying and selling shares looks like. Yes, you're still aiming to make money from shares, but rather than focusing on short time frames, you're buying shares and other investments that you believe will grow in value over years and decades. This long-term approach still comes with risks, but it's a lot less high stakes than trying to make money from short-term price movements. And when people say they want to start trading, often this is what they actually mean. With long-term investing, the general rule of thumb is that you should only invest money that you can comfortably do without for 5 or more years. And this is because you'll have time to ride out the ups and downs of markets and won't be forced to sell because you need the money back when prices are low. And when it comes to investing, it's also important to know that investors don't typically put all their money into one company because that would be very risky. Instead, most successful investors build a diversified investment portfolio made up of shares of multiple companies alongside other investments, with the actual makeup of their portfolio matching their goals, time frame, and how comfortable they are with risk. Around this topic, we made a video on the channel, so if you want to learn more, check it out. Okay, so that's the background. But what next if you want to start investing in shares online? Well, for most people these days, the next step is to find an online investment platform. These platforms, like Moneyfarm, give you access to financial markets and allow you to buy and sell shares and other investments online. Some platforms are geared up for those who want to trade frequently and spend a lot of time following markets, so they have tools and charts to help with analysis and reacting quickly. Other platforms are designed more for long-term investors and have more of a focus on helping people build diversified portfolios, invest regularly, and manage the ups and downs of markits. Whatever you choose, there's one thing that's non-negotiable. Make sure the platform is FCA regulated. The FCA is the UK's financial regulator, and its job is to make sure that investment providers meet proper standards and treat customers fairly. It's a basic but important box to tick before you hand over any money. And one more thing to get your head around before committing to any platform is fees. Every platform charges them, but they vary quite a bit, and the structure matters too. Look out for platform fees, trading fees, and fund charges, as well as things like foreign currency conversion fees. None of these is a reason to panic, but they do add up over time, and the more you pay in fees, the less of your money is actually working for you. As a general rule, cheaper isn't always better, but transparency is essential. So look for a platform like Moneyfarm that publishes its fees clearly, so you always know exactly what you're paying and why. Now, once you've chosen a platform, you'll need an account to hold your investments in. And for most people starting out, one type stands head and shoulders above the rest: a stocks and shares ISA, as it allows you to invest up to £20,000 tax-free each tax year. We've got a full video on stocks and shares ISAs on this channel if you want the complete picture, but as a starting point, it's the account most UK investors reach for first, and with good reason. If you're thinking further ahead, it's also worth knowing that you can hold shares inside a self-invested personal pension, a SIP, and benefit from tax relief on your contributions on top of that. And if you've already maxed your ISA allowance, a general investment account lets you keep investing without a cap, though the tax advantages don't apply in the same way. But for most people just getting started, a stocks and shares ISA is the natural home. So you've got your platform and your account sorted. Now the obvious question: what can you actually buy? The natural starting point for UK investors is our international markets. That would mean the FTSE 100 in the UK, which includes the biggest companies listed here. Think Tesco, Rolls-Royce, NatWest, BAE Systems, and so on. But also shares that are listed in the US, in European countries, or in other advanced economies. The only thing worth noting is that if you buy outside of the UK, you're buying shares priced in foreign currencies. So exchange rate movements become part of that equation too, which means the value of your investment can shift, not just because of the share price, but because of what's happening between our currency and the one the share is priced in. Now, researching and picking individual companies takes real time and effort. Before buying any share, you'd want to understand what the business actually does and how it makes money, who's running it, where it sits in its market, how it's been performing, whether it pays dividends, and that's before you even start thinking about valuation. Now, you know it's genuinely interesting if you enjoy it. But it's not a small commitment, which is exactly why many investors don't go down the individual share route at all. Instead, they choose to buy funds, and it's not hard to see why. A fund bundles together a whole range of investments. So instead of researching and buying dozens of individual companies, you get instant diversification in a single purchase. So if some holdings perform badly, others can pick up the slack. It's a simpler, lower maintenance way to get exposure to the stock market, and generally a less risky one than putting all your eggs in a handful of companies. The most popular type today is the ETF, also known as an exchange-traded fund. Rather than trying to beat the market, most ETFs simply track an index, like the FTSE 100 or the S&P 500 in the US, holding the same companies. Their prices move throughout the day, just like individual shares, and they tend to be low cost. They have many great benefits as an investment option, so if you want to learn more, we have a couple of videos on the channel. Actively managed mutual funds are another option, as these have a professional fund manager making investment decisions with the aim of outperforming the market. However, that expertise comes at a higher cost, and it's worth knowing that not all actively managed funds actually succeed in beating their benchmarks over the long run. If, on the other hand, all of this sounds like more than you want to take on right now, or too complicated, that's completely understandable. And it doesn't mean investing isn't for you, it just means there's a different way in. Rather than choosing your own shares or funds, you can invest in a fully managed portfolio where the investment decisions are made for you. With Moneyfarm, for example, you choose your goal and how much risk you're comfortable with, and you're matched to one of 7 managed portfolios, ranging from lower risk to higher risk, that are built, monitored, and rebalanced by an expert investment team. So the fork really comes down to this: how involved do you want to be? If you enjoy researching companies and want hands-on control, the DIY route of individual shares or building your own portfolio of ETFs and funds gives you that. And you can do that on Moneyfarm's platform, which gives DIY investors access to over 1,000 assets, from UK and international stocks to ETFs, bonds and funds. If you'd rather set your parameters and let someone else handle the day-to-day, a managed portfolio does the heavy lifting for you. Again, you can do this on Moneyfarm. So check out the description to learn more. And there you have it, everything you need to know about starting to trade online. If you found this video useful, please subscribe to the channel. And if you have any questions, drop a comment below. As always, I look forward to seeing you in the next video. Bye bye for now.